All right. Episode 60 or 59? Episode 59, Exit Liquidity. We got on Pluto and Wukong from Particle. How you guys doing?
We are doing well. Thank you for
We're doing,
having us.
yeah, doing well. Thanks for having us, guys.
Cool. We'll
All
we'll
right.
jump straight in. Can you jump into a little bit about each of yourselves? Kind of intro on your background into the ecosystem.
Of course. Yeah, my background is in engineering. Went to MIT before in computer science. Got into crypto around 2021. Started with joining some company, starting a few companies, and then landed on DeFi eventually. Just love how things are like quickly scaling up. Good ideas can just grow very quickly in the DeFi landscape. Um, yeah, and got into Blast ecosystem November last year. Very excited building in the ecosystem.
Yeah, so my previous experience is in the gaming and virtual goods space. I've been following crypto since I think pretty early 2012, but I really got into it around 2019 when I used it to start trading virtual currencies, specifically for games. And then I built some startups in the space, and then I became the growth lead at this Y Combinator backed company called RCT AI, as well as the subsidiary Delysium, which was pretty big in Korea. And I led it to the token listing at roughly a $1 billion fully diluted valuation. I left, and then I joined Particle after that.
Nice. Great stuff. Yeah, I think the gaming to crypto conversion is a pretty compelling one. I mean, that's like what prompted Vitalik to go and create Ethereum, I think, and that's a lot of people on board that way. Interestingly enough.
Yeah. The amount of people who are onboarded by RuneScape is most people either tell you, but some of them like don't admit it. But like a lot of us found out about crypto early in 2012, 2013 during that period of time, but also during the I guess like big ICO wave and after that, a lot of the skill sets that you learn as part of the ecosystem there. You'll find that like the transition from virtual currency to I guess like cryptocurrencies is a really natural transition. So, and a lot of the elements of it, like let's say for example just a peer-to-peer market, for example, are aspects that are really I guess transferable and convertible.
Yeah, for sure. You guys were asking us before we went live here about the name Exit Liquidity. One of the reasons we are called Exit Liquidity is we can't start an episode until we hear both of your favorite Exit Liquidity stories of your favorite time being Exit Liquidity in this industry. So Wukong, you wanna go first?
You mean like the best asset I know from the industry? Um, I mean, I came from a mostly Web 2 background. I tend to believe in um, like a decent asset, meaning like investors are making a good return. Almost all the users, at least the early users, got their it's not like rocked. To be very honest with you, I think Blur did like a pretty good job over their seasons of airdrops, and right now it's their third season. If you look at um, their their like token launch events, um, obviously their investors are making pretty good return. Um, Even like the first airdrop, and then until like the token unlock for the insiders, that's a pretty good return, and most importantly for their let alone like the the big users, the big farmers, they got like pretty good return. But like me as like I'm not like a huge farmer on Blur. Before the little money and time I put in there, it's good return, at least for the early users. I think they did a pretty good job over there. And that kind of I think goal is what we're trying to hit with our plan. Yeah, that's my current observation. Just being yeah, decent for your investors, for your early users, for your ongoing users. Yeah, that's my take.
Yeah, for sure. I guess just to like provide a little bit of context on that question, I think I may have like misexplained that one.
Oh,
We're looking for like a time when you were exit liquidity in the industry. So like for example, my biggest one was probably Luna. I bought
oh, it's just
Luna
it's
a
like,
lot
oh,
on
okay,
the way
okay,
up,
okay.
and I held it all the way down to 0. So
Oh, wow.
your story of being someone else's exit liquidity.
Oh, I see. Probably our gobblers. I bought one at like pennies, and then I hold until now. I still redeem the what's that called, the goo token every now and then. I still haven't like made it back for my initial investment, but it's a fun time.
Yeah, that was definitely an entertaining one, an interesting one for sure.
I thought the
Pluto, what about
tokenomics
you?
was. I thought the tokenomics was a killer. It's like it has some duality about the token NFT interplay, similar to the ERC4 thing recently. Um, but maybe it's too complicated. People didn't get it, and it's just infinitely diluting. So so the price didn't hold up for long. But yeah, it was still fun.
Yeah, ahead of its time, maybe. That was definitely, it was an experiment for sure.
Yeah.
Pluto, I don't want to call on you too much. I know you're under the weather, but if you got your exit liquidity story, would love to hear it.
Yeah, for context, caught something at Denver, and you know, Denver has hands. So yeah, in terms of exit liquidity, I think in my case, it was investing in like the AGIX, like Singularity Net ecosystem. So like they spin out like projects, right, which are really their team members, and then their own little projects as kind of like, and then they IDO it. And in one particular, there's this thing called Cogito protocol, which is kind of doing something like Athena, except I guess like more directly just doing like a tokenized fund with AI on chain. So I thought it was a good idea. Put you know, a significant amount of money in there, thinking that okay, I won't get rugged because you know Singularity Net is like behind this, right? But what I didn't realize was that like Singularity Net has not done anything in a long time, and so and you know that culture apparently has passed on to their sort of side projects, or at least not to say they haven't delivering it, but they just move like extremely slow, like Cardano. So yeah, that project, it's been almost a year. It's trading at like 30-40% discount, and the fund or anything still hasn't been set up. So I am definitely exit liquidity there.
Yeah, those are
Yeah, interesting one.
I haven't heard of that one. That sounds interesting.
Yeah, I thought it was safe, right? Because you know the biggest issue for anything is that you don't want to get rugged first. So I was like, okay, I'm not gonna get rugged here, right? But then I failed to, and I thought the idea was interesting. I just failed to account for the fact that like, and which is really important, right? Which is that sometimes teams don't really have the motivation, or it's like with big companies. When they spin off their own teams, you'll see a lot of the culture, a lot of the characteristics pass on, and it's very rare that you'll see like an offshoot of a large company or a spin-off get extremely successful or surpass the success of their I guess original sort of company, just because of the like, I guess like the main thing is just the team, but also the management, you know, probably maintains a certain degree of control. But in either way, I'm pretty bad at liquidity there. And my thesis was I wasn't going to get rugged. It's pretty smart, and they should be able to deliver it, right? And so yeah. But I mean, like, the other thing is my Azuki's down, I think, like 40-50%. But I bought it for the art, is what I tell myself these days. And yeah, it's pretty great art. So I'm cool holding it to 0 or to infinity. So
Yeah, I think not impossible to get rugged is a solid one. I think we've all felt that with certain projects. Great backgrounds from both of you guys. We're getting into the kind of start of Blast. It's been a few days. When did you guys first decide to launch on Blast, and why? Were there any other chains that were like front runners that could have been the place where you guys resided, or was it Blast from the jump?
So we talked to the Blast team, Pac-Man and the team, November last year. And after the call, we just decided right on Blast is the choice. It's very obvious. There's a lot of liquidity flowing around. There's a lot of users, a lot of attention. It's a very good go-to-market strategy. At the time, our other choices were established L2, Optimism, Arbitrum, basically. But the thing we look up mostly for, like, outside of go-to-market strategy and users, is the ability to work with the chain itself closely. So yeah, we have the fortune to work with the Blast team closely on the technical front, on the product front, on the incentive front. Yeah, I think that gives us a lot of like good feedback for like how to build our product better. And also on Blast, it's apparent early on that a lot of the creative and committed teams are there. Like, for example, we got to know Thruster on December last year, and it was really efficient. Like, we explained our ideas, they explained their plan on building Thruster on Blast, and it's just after one call or two, it's immediately clear that we should get along together. And yeah, examples like this, it's it's a positive feedback loop on the entire Blast ecosystem. I would say it's easy to collaborate with others. It's easy to talk to. I mean, Blast team is being overwhelmed all the time, but they remain like an open attitude to the projects. So yeah, overall it's a very good experience, and it's a good ecosystem to attract users.
Yeah, I think that makes a lot of sense. I mean, all the different mechanics aside, it definitely, from the outside, it seems like they have a really strong, like, just feedback process. Advisors, they seem to be very involved with the teams that have decided to build there. I think they've probably had one of like the most complete ecosystems pre-launch that we've seen in a while. You mentioned Thruster. Are there other like teams in that ecosystem that people either who you think are going to do really well or you're already partnered with? Just anything else you're excited for in that ecosystem outside of Particle, of course?
Right. So we are collaborating with quite a few teams there. For example, Juice, MetaStreet, Pack Finance, Orbit, Landing Protocol. A lot of the teams there are yeah, very strong, very committed. Looking at the maybe like DeFi Llama leaderboards. I mean, DeFi Llama is focusing on like TVL and trading volume. Yeah, a lot of the teams up there, I mean, I'm pretty sure they are doing really well. We are not like very far ahead on the leaderboard. Those are our target to learn from and to catch up.
yeah, I think to add on to that, there's one project that we're working with that hasn't fully launched yet, but I think they're ex Spartan and ex Goldman, called I think Agent Fi, and they're looking into like I guess releasing NFTs with like an existing trading strategy and letting the sort of AI agent execute on that. I thought that was just really cool. So I'm pretty bullish on that. But everyone in Blast is generally very, very capable. So like even the meme coins, when it comes to I guess like Pac-Moon or some of the other meme coins, they're very, very good at what they do. So I think the Blast ecosystem has been a lesson and a journey. It's just been such a pleasure, but also extremely tiring to be a part of. Yeah.
Yeah, I think Pac-Man's initial ideas and initial announcement, it definitely got some pushback. There were concerns, but I think it's been somewhat of like a masterclass in game theory and incentivizing not only users for their own liquidity, but also kind of talent and developers to harness that liquidity. So I think they did an awesome job, and I'm excited to see all the projects that pop up. Especially that's why we have you on here today. Could you talk a little bit about Particle and kind of describe from a high level what it is and what you guys want to accomplish?
Of course, of course. So let me just explain in high level how we got the idea and what's our specific solution to the problem. So we look at so we build in the bear market. Obviously, we started in the bear market, and then we are now in the bull market. But when we observe the the crypto market, financial market in general, we observe that across bull market, across bear market, leverage trading volume is always at least like 10 times the spot market, right? This is universally true across traditional markets like Nasdaq, Robinhood, to like crypto market, decentralized or centralized, right? But on crypto, the current status quo for leverage trading is that someone has to permission it, right? If we look at all the tokens with over $1 million market cap, 2/3 of them are not leverage tradable anywhere. It's not on Binance, it's not on DYDX, it's not on GMX. But if we think about it, those tokens, those 2/3 of tokens, they exactly are the tokens that need efficient price discovery, right? The price moves a lot, and if you add leverage to it, price can converge faster to their in their price discovery mode. And if we talk about like technical norms, the reason that leverage trading is not like feasible for those other not like the blue chip tokens, is that one big reason is there's no like robust price oracle for those tokens, and leverage trading in the traditional sense requires a very precise price oracle. Otherwise, there's like risk in either the LP side or on the trader side. So and doing Particle, we were trying to think about this whole like clearly there's a market to build like a leverage trading platform for any asset, right? And then we start from like thinking the basic mechanism, like how can we enable this for any asset just permissionlessly. And we are a big fan of Uniswap. On Uniswap is like any token can be tradable as long as there's liquidity. Right? There's no dependency on price oracle or anything. I mean, you can think of it as they are like the base market. Everything trade there, so you don't need a price oracle. But the design over there, like the AMM design, eliminating the price oracle, that's something we start with. So Particle is the goal for Particle is really reaching the same level of permissionless as Uniswap to enable leverage trading for any token. And the way we do this is basically margin trading, and that's why the reason that's why Blast was putting us in the landing category in their Blast winner list. Is that, I mean, if we think of a Particle, the underlying mechanism is margin trading. You borrow asset, and then you can trade with a larger exposure. That's leverage, right? And the borrowing on Particle is that we borrow from the AMM liquidity pool, and there's a set of mathematical model there using AMM liquidity math to make sure that the LP is always kind of like solvent, meaning that from Particle's protocol or the underlying AMM, the LP can always withdraw the same amount of token. So in the AMM terminology, the LP doesn't feel a higher impermanent loss basically. So over here it's like yeah, we are going into a little deep here, but the LP is always like kind of earning more because the liquidity is used for both spot trading and leverage trading, and they are suffering less, no higher impermanent loss compared to the underlying AMM.
Gotcha. Okay. Yeah, definitely a lot to unpack there on the product side. Can you? So as far as I understand, LPs are able to earn more and they're not exposed to impermanent loss when using Particle or when LPing on Particle. Are you guys, is this your own AMM that's backing this trading, or are you using some, like in the way that other products will use UniV3 for similar stuff like this? Is the AMM yours, or are you getting it from elsewhere?
We're getting it from elsewhere. We built on top of Uniswap v3 standard. And on Blast, our underlying AMM is Thruster.
Okay. And do you? So how does that? How are LPs not? Because impermanent loss is obviously like a big consideration when LPing on a place like Uniswap, or any AMM really. How can you explain how that works? How they're not subject to that on Particle?
Right. So we do have impermanent loss. It's just the impermanent loss is no higher than the underlying AMM's impermanent loss. So the flow of liquidity is the following. So when an LP comes to Particle, their liquidity is by default used by Thruster. So if there's no leverage trading, even zero leverage trading happening, their liquidity is still being used for spot swapping, right? So it's still generating a considerable amount of yield. And on Blast, they are getting Thruster reward, Blast reward, all by default, and Blast yield obviously. And when their liquidity is being borrowed, because we connect to Thruster's contract, we use all the parameter from Uniswap v3 standard. So their liquidity, their borrowed liquidity, will be earning same amount of yield while suffering no higher impermanent loss because we use all the liquidity math from the underlying contract. And in doing so, basically, 1 unit of liquidity is getting higher amount of yield in the traditional sense for liquidity provision. And on Blast, 1 unit of liquidity supplying to Particle will earn multiple folds of reward, right? You will earn Blast reward, you will earn Thruster reward, you will earn Particle reward. So what we want to demonstrate here is the liquidity efficiency deploying on Particle is considerably higher than just sitting the liquidity idle or just plainly deploying the liquidity on simple AMM. Yeah. So I think just to expand this here a little bit, our goal with this protocol, on like just long-term protocol standpoint, is to increase the liquidity efficiency for LPs, and traders obviously will have the option to do leverage trading. And on Blast, we want to optimize for per unit liquidity like reward on multiple fronts.
Okay, gotcha. Yeah, I think when you really start to break down the rewards available on Particle and on Blast in general, it can definitely make like head spin a little bit. I do want to talk about that a little bit later, but I want to allude back to before we started the live stream, we were talking a little bit about meme coins and just like tail assets in general, trading stuff outside of the usual Bitcoin, Ethereum, whatever else, like big cap assets. And I know that one of the advantages of Particle is that we can start to offer those assets with leverage. What does that look like in practice? Like, let's say I were to go and launch a token tomorrow and I
Right.
want to get it on Particle one day to trade
Right.
with leverage.
Right.
How would that process happen? Would I have to have a certain amount of volume, a certain amount of liquidity?
Right.
What's like the prerequisites to get something tradable on there?
Yes. So the step, like the actionable step, is very straightforward. So you have a new token, you have a new pool. You first open that pool on Thruster, because we need to have like UniV3 pool like exists, right? And then you put some liquidity into that pool, and on Particle, you can transfer that liquidity position to Particle's contract. And on UniV3, transferring liquidity position is basically transferring the position NFT, right, on Particle contract, and that will just be enough to trade with leverage for that token pair. And in fact, there are people doing that already. We don't even know what token that is, and people just supply it into Particle, and permissionlessly, our front end will just pick up the available liquidity for different pairs. Yeah, and you brought up a very good point about amount of liquidity that's needed, because the underlying mechanism is margin trading. The total amount of borrowable liquidity will be bounded by amount of liquidity supplied on Particle. So let's say you put in like 100K of liquidity into this pool, and then supply the Particle. The maximum amount of liquidity that can be borrowed will be that 100K. So if someone is doing like a 10K long exposure with 10x leverage, yeah, that will be the only position that can be opened with that liquidity provision. So yeah, similar to all other DeFi protocol, we want to attract as much liquidity as possible to like enable more leverage trading, enable like more positions to be opened for that pool.
And what's the process for kind of increasing that leverage? Will users on Particle just hop into Particle and just LP in those specific places? Or
Right.
will just like a majority of USDC be distributed to wherever it's needed?
Right. So this depends on the users, I would say. We want to make the platform kind of permissionless, like Uniswap. So as long as there's liquidity available, leverage trading can happen. But obviously, in the beginning, we want to use whatever incentive we have to like kind of like guide the market towards certain pairs. Those pairs include like blue chip pairs like ETH USDB. Like whatever reward we get from Blast, from Thruster, we'll be diverting a lot of them to like those pools. So those pools include like ETH USDB, like traditional pairs, and some partnership pools like token projects or other projects that launch their token. If we collaborate with them, we'll divert some incentive there, and with the incentive, people will divert more liquidity into those pools, and more like TVL, higher availability for leverage trading, and so on.
Okay, yeah, that makes sense. I want to take a step back real quick and like try and make some comparisons just to help me understand a little bit more.
Right.
As far as I understand, this is a similar approach to what people like Infinity Pools, Panoptic, Limitless, Good Entry, those guys are kind of doing. Is that a correct assumption?
Yeah, we can compare with. I think it's fair to compare with all those protocols. It's all permissionless, and it has some. It has ability to do leverage trading for all those, either like option or other margin trading protocol. Yeah.
Gotcha. Okay. So, my question, like with regards to that, is each of those kind of have like a bit of like a niche, right? Like
Right.
Panoptic presents them as options or like
Right.
perpetual options.
Right.
Infinity Pools is all about like 1000x leverage or whatever without
Right.
without liquidations.
Right.
What would you say sets Particle apart in that crowd? What's your kind of like niche there?
Right. So Panoptic is option. So this
Yeah.
by category is pretty different. I think options are more for professional users who understand like Blackshore and they know what they are doing to make like a big fortune out of there. I think now the closest comparison is indeed Infinity Pools. I think on the technical level, the main difference is that they build their own AMM, and we build on top of existing AMMs. Um, and there's pros and cons in the decisions that we make. But yeah, the design is the goal is very similar. We all trade. We want to enable leverage trading for different assets. And yeah, they want to emphasize on like infinite amount of leverage. We emphasize on like permissionless on different assets. Yeah, and the difference in AMM choice. So for us, we just feel like it's an aligned goal with different parties at play. Like basically on Particle, there are 4 parties. There's underlying AMM, there's token project, there's traders, and there's LP. We feel like working with the underlying AMM can align all 4 parties together. So if we work with underlying AMM, higher trading volume means it's both higher trading volume on Particle and higher trading volume on the underlying AMM. So we are not competing. So that's why we will have like a very collaborative experience with Thruster since day one, right? And because the actual trading happens on the underlying AMM, or the swap happens there, the trading volume is the actual trading volume for token projects. So coming to LP us enables leverage trading, enables higher trading volume for the token project. That's higher visibility for token projects, right? Traders obviously they will have more options to long and short, and for LPs, the LP into Particle is basically LP into 2 projects, right? Into both Thruster and Particle. They earn multiple rewards, and higher trading volume means higher swapping fee, and Particle allows them to have like borrow like lending liquidity. Like the liquidity can be used for like lending, so it's like 2 folds of liquidity efficiency in doing this kind of design.
Gotcha. Yeah. Definitely a lot of different like stakeholders with this model, which I always find interesting. Definitely gonna be interesting to watch it scale and see how those different incentives and those different costs and benefits play out. You alluded to this earlier. I wanted to ask you guys about like how you're planning on using blast incentives, but now I'm realizing it will be Particle plus Thruster plus blast incentives, which just like makes the question that much more complicated. Just like broadly, I'm curious as to, I mean, you talked about the different stakeholders and kind of what their priorities might be. With all the different incentive sources that you would have from a design like this, how are you guys thinking about that system? What kind of activity are you most looking to incentivize, or what's like highest priority for you there?
Right. Mostly will be liquidity provision. But I just want to touch on Blast incentive a little bit. So Blast has 2 sets of incentive, right? Incentives. So one is Blast liquidity point. The other one is Blast gold. So Blast liquidity point is like I don't think there's much room to play with Blast liquidity point. Blast liquidity point is like if the liquidity was in your wallet, you will earn Blast points, right? Now you move the liquidity from your wallet into some D apps. From Blast point of view, the liquidity is now in the D apps contract, right? So Blast will give those contracts some points. Um, Now this is kind of like a slight loss for the for the users, right? Because previously with the liquidities in their wallet, they will earn Blast point like continuously. Now it's the contract that earns the point. So Blast liquidity points is basically for the contract to redirect the points they earn back to the users, right? So let's say I put in 1 ETH to Particle. Particle should count that 1 ETH as my point, right? My liquidity point. So that's like one-to-one mapping. Our goal with Blast liquidity point is really to make sure fair accounting, and like accurate accounting. So yeah, and our protocol is a little more complicated, so it took us some time. This is because we have to work with Thruster first. So from Blast point of view, all the liquidity is on Thruster, and Thruster will need to redirect the point to different projects that's on Thruster, we being one of the projects, right? So from Thruster point of view, Particle is a big LP, even though users come to Particle to LP first, right? And the LP will go to Thruster. So like the flow of Blast liquidity point is Blast will give the points to Thruster, and Thruster will give the point to Particle, and Particle will give it back to users. So this requires a three-party play, and we share the same code base with Thruster to make sure like fair accounting on the Blast liquidity point. So over there, that's a long story to tell. Like, okay, Blast liquidity point that has like little room. That's just do fair accounting. We need to make sure like the per dollar amount of spending on the liquidity, we have to like fairly count it back to users. So there's little room to play. But I think what's important is the Blast Gold. That so that incentive is interesting. So from Blast's at least like public announcement, I think they divide like the incentive into like half. Half of them is for liquidity provision. The other half is for all the DApps. So it's now up to all the DApps. The other half is, they call it Blast Gold. So now it's up to all the DApps to design incentive program to distribute the Blast Gold to attract users, right? And for us, our goal is really, we want to optimize for per dollar spent or per ETH spent, the amount of Blast Gold you will get from all the protocols you combined. So if someone is spending like $1 on Particle, they will get Blast Gold from our protocol, from Thruster, and from all the other protocols that collaborate with us. One example is really there's a giant LP, big whale, depositing LP for an MetaStreet wrapped token. So it's a yeah, this is really this example really shines for our permissionless design. We didn't know about this token before, and clearly we cannot plan for this. But someone just putting I think $4.5 million worth of liquidity into that pool, and I think if everything plays out, they will earn MetaStreet plus Particle plus Thruster Blast Gold from all those projects combined. So out of that 4.5 million, we want to demonstrate that per dollar spent, the amount of Blast Gold they get is really substantial. Yeah, and what's interesting about Blast Gold, outside of this relatively short-term incentive for the Blast Gold distribution, we just want to make sure that this this incentive program aligns with the long-term play for the protocol. So even if it's without like Blast incentive, like doing this kind of like wrap token and the liquidity provision, it's incentivizing like inherently doing so should give this LP some reward. Like large liquidity like facilitates like the trading for that pool. It's deep liquidity, so like all the price impact and so on, and the fees will be small. So doing so like it will attract more traders, and if you attract traders, the LP will naturally get incentivized. So we just want to make sure long term, the Blast Go incentive aligns with the protocol like native incentive. So it's like over the long term, like we use the Blast Go as um, like a guide to structure the user behavior, and over long term, this will like persist, hopefully.
Gotcha. Yeah. Yeah, that's really interesting. I think an important distinction you made there, which not many users I think are aware of, or at least I'm not hearing that much about it, is that blast points and blast gold are two different things.
Right.
Blast points are distributed based on liquidity,
Right.
and blast gold it's still uncertain. It's subjective, really, how it'll be distributed. But
Right.
what they've given some ideas, and one thing they've made clear is that they will reward projects who utilize like blast native features creatively. So
Right.
people who do an interesting job of redirecting the gas revenue or the points or the gold or any of that stuff in an interesting way. Are there any features you guys have thought about that like might do a really good job of hitting on that, of being seen as like super blast native features?
Right. So on we tend to be, as DeFi project, we tend to be like accurate on the numbers. So for the Blast native yield, we just distribute it back to LPs fairly, according to their liquidity provision amount. And gas rebate, we give it all back to the users. Um, also proportionally to their spending on the protocol. So basically, it should be gasless transactions, for all the interaction with our protocol. Um, Gas rebate will take some time. This hits some technical ground. I think Blast has this 30-day, I think, if I read the doc correctly. So after 30 days, you'll be you will get like it's kind of like a rolling basis. So after 30 days, you will reclaim all the gas you've spent for the past month, basically. Yeah, we do that for all of our users. I think the creative incentive here we got is really Blast Gold. Like I said, we really want to optimize for the per dollar spent, of the Blast Gold receipt for the end user, and we'll incentivize that by directing that to certain pools, give certain pools some multipliers, and so on. Yeah.
Yeah. Yeah, that makes sense. I'm really excited to see that kind of stuff, just to see how different teams. It's really not like anything we've seen before, and like it's just going to start to roll out more and more. So it's going to be fun to play around with, and also to just like as a researcher see how it works.
Right.
I'm interested in like timeline, because we've started looking into like these sort of concentrated liquidity dexes since I don't know, I think I first heard about them back in like March or April. And on most other chains, I think there are a few that are live, but none of them have really scaled too much yet. I'm wondering, like, how are you guys thinking about 2024? Sort of like a rough roadmap. Where do you hope to be, like, by the end of the year? What are some key like dates you're looking to have stuff rolled out by?
Right. So so right now everything is structured around Blast. There will be this Blast token generation event, around May or June. We'll plan. We'll do a lot of product updates and our incentive program around that time frame. Going more into the future. We might build like second version, or just improved products along the way. So we really want to just factor in all of the users' feedback. Like you said, we are one of the very few protocols that really launch and hit the market. It's a brand new. It's a wild west. I would say permissionless leverage trading for anything. This is a first time this is being achieved. So we are also learning along the way as well. So we believe in like iterating on users' feedback rather than like just build something behind the scene and then ship to the market. We just want like to factor in all the users' feedback. So to be honest, what it will look like in 6 months of time, in a year of time, this will be very much determined by the users, by the market. We don't want to make some like some like clever prediction over there over time, and then it can be hard to predict. I will have to say.
Yeah, I think this was really good. I want to kind of summarize the product alongside the problem, and how this product is potentially the solution. Um, and correct me if I'm wrong. So, from what, and Ali touched on this a bit, but the idea that I'm getting from this conversation is that this design has somewhat been attempted before. Trying to provide permissionless liquidity to these long tail assets, and usage isn't really a problem. It's definitely been, or user demand hasn't been a problem. The problem has arose from kind of the ability to provide liquidity for these, and so Particle solution revolves around like its basically native design inside of Blast, and being able to reward these LPs in the most proper way to kind of
Mhm.
fill that gap. Do I have
Mhm.
that correct?
Yes, yes, yes.
Okay.
Yeah, I think to add on to that, like you can kind of think of particles more of like I guess like a layer of leverage in that it can aggregate spot liquidity from any underlying DEX, and it's highly aligned for DEXs to do so, right? As well as LPs and all the other projects. So I think in terms of like to competitors, well, I wouldn't say competitors, because when you bootstrap your own AMM, you are kind of fighting a war in two fronts, right? Firstly, you have to bootstrap liquidity for your underlying, I guess, spot AMM's liquidity, right? In which you would be competing with everyone in the ecosystem that way. And then also, of course, the purpose of that is to enable like a perp like experience, in which now you're also fighting for trading volume and traders, with anything from like a hybrid DEX, a hybrid perp DEX, to, oh, sorry, you guys froze. Yeah, a hybrid perp DEX, um, to other sort of similar, I guess, perp related platforms. So I think Particle is kind of like aligning ourselves with the spot dexes and aggregating their liquidity, and we're going to focus on using that liquidity to allow traders to trade with leverage, while being highly aligned with the ecosystem. So I think that's like the key here, in that a lot of these projects that will bootstrap their AMMs, they're fundamentally fighting a much tougher battle, which we feel from our architecture and our approach to it is not exactly needed. So I think it's like, if you are trying to bootstrap your own AMM, then also setting up, I guess, like your own not derivatives or perps platform, you're kind of trying to build essentially like an empire, right? You're trying to own the whole vertical, which fundamentally it's a much different approach. Um, I guess ours is more like composable, and we would be more so like a layer of leverage on top of all of these spot dexes.
Yeah, yeah. I think that message has uh, became clear through this conversation. We talked a little bit about where volume has been kind of in these early days of Blast. We have some base references. We saw a bunch of meme coins, and then kind of the majors popped up as volume. But we're in this kind of meme coin, altcoin mania. What have your guys' observations been on where volume on Blast is, and where you guys think it's headed?
Right. Um, yeah, it caught us by surprise that main point volume is substantially higher than even the blue chip coins. But it's early days. It's hard to tell over the long like months time, weeks time, it's gonna sustain or not. Um, what I would say is there's a lot of interesting launchpad and mechanism um, for meme coins, altcoins. Um, so this baseline project, launching coins by making sure like the token deployer has to lock in some liquidity and giving the tokens very initial utility like available for like lending and so on. That's a very interesting way to launch projects, right? And we know projects like Zap and Metashop, they will do something interesting for token launches as well. So very excited to see different main coins launch and altcoin launch on Blast. I wouldn't say like specific which project to look up to. It's really hard to tell. I'm not a very big like meme coin trader. So yeah, I don't have any financial advice over here.
Yeah, fair enough. Definitely not looking for any necessarily. We're coming up on time here. I'm curious as to before we start to wrap up, you guys have been live in testnet for a little while. How has that been so far? Are there any observations that have come up? Any interesting activity you've seen? Anything unexpected? Just overall, how has the testnet period been?
The testnet period has been it's overwhelming. We got like a lot of transactions going, but testnet is testnet, right? So it's like free money and uh, it's really stress testing like the system, but not stress testing like the economic. We are live on mainnet now, and it has some considerable amount of TVL and traffic. Over there, yeah, it's really a different beast on mainnet. We are trying to observe the user behavior, fixing bugs everywhere. Um, yeah, it's hard to say like any specific lessons so far. It's mostly just grinding on products and improving user experience.
Yeah, I think one thing that did stand out from testnet, obviously we had, I think like over 50,000 users for like each phase of our testnet, and before we closed the Blast testnet, we had 500,000 transactions. This was not incentivized, but a really key thing is when we talk about like the niches, leverage trade anything, right? Is that we found that the biggest kind of audience for Particle actually came from, I think, 4 countries. It was Japan, Korea, China, and the United States, right? And one thing you'll notice about these 4 regions is that, firstly, they're very highly sought after markets, but also they have this kind of like regulatory wall closing in, right? For example, Korea has no leverage trading; they only have spot. Japan has, I think, been limited to 2 times leverage, and things are getting closer. China, Hong Kong, for example, like crypto trading is already restricted there. United States as well, we're seeing like everything start to close in on exchanges, right? So I think the key thing is we're seeing that a lot of these countries that don't really have, like the full leverage trading experience, find Particle super attractive and super interesting, just because it enables something that is limited in their sort of geography. So I think that's probably like the key thing that we noticed is that we didn't specifically target a specific region, but activity in these regions and the audience and reception in these regions has picked up significantly naturally.
Yeah, I think that's important to mention. You also touched on, I mean, 50,000 people on testnet on each phase is pretty remarkable. I think it's pretty clear what those users need and what they might be waiting for. I wanted to touch a little bit as we wrap up here on if you guys had any specific plans on particle specific incentive mechanisms, and then maybe touch on how you guys think about governance. You talk a lot about kind of the permissionlessness of the application. Are there any governance structures in any other perp dexes or any other projects that you guys feel works well?
Yes. So we are a big fan of curves VE model. So the vote as core model, they allow the token holders to vote which pool should attract more liquidity. Right now, I mean, we divert the blast gold as an incentive, kind of like a guide for users to put in liquidity. But over long term, yeah, we want to do something along the lines of VE model to let users permissionlessly incentivize other users to put in liquidity for certain pools. Yeah, I think that will be a very good future to build into.
Nice. Yeah, there's a lot on the governance side we definitely find interesting. It's cool to see how projects are thinking about that at this stage. Obviously quite early for you guys, I think, but always good to get thoughts there. We're about up on time here. I want to just give you guys a minute or two in case there was anything we missed that you wanted to let our audience know, any sort of calls to action, anything that you think the people should be aware of before we sign off.
I think we touched pretty much everything. Thanks once again for having us. So to get to know more about Particle, everything is on particle.trade, our main page. The app is live on Blast mainnet on app.particle.trade. Yeah, on our main page, particle.trade, you can see all the docs, all the social, Twitter, Discord, docs, and some Medium article. Yeah, everything is there. If anyone has any question or run into any bugs in the product or improvement suggestions, feel free to come to our Discord and open the ticket. Our team will be working on that.
Awesome. Great stuff. Again, we appreciate you guys for coming on. I hope everyone enjoyed. That has been that's it for this week. Thanks, guys.
Thanks for having us.
Thank you for having us.